The moniker Tesla is self-explanatory. It bears the secrets to an electrifying, mysterious, and unstoppable future. This electric giant has a mysterious and potentially explosive narrative beneath its surface. We'll analyze Tesla's most recent Q3 delivery and production figures, revealing the narrative behind the numbers and their implications for the company's future. You'll have an inside look at how established automakers and new EV competitors fare in comparison to Tesla's growth trajectory. Do they continue to lead, or is the difference getting closer? We'll look at Tesla's forays into uncharted territory, such as the eagerly awaited Cybertruck and the revolutionary Tesla Semi. In what ways can these developments help Tesla advance? It's important to comprehend Tesla's finances. We'll dissect the figures and forecasts that may influence Tesla's financial situation in the upcoming quarters. Lastly, we'll talk about the possible dangers and difficulties Tesla may face in the future, giving investors a comprehensive picture of what to be aware of. Come along with us as we set off on an exciting tour into the innovative world of Tesla, where sales are surging, industry-leading goods are just around the corner, and rivals are finding it difficult to stay up. As we reveal the mysteries around Tesla's reign as the best automobile stock, stay tuned. For more, don't forget to subscribe to Tesla Stock News and like this video. Now that we have covered that, let's begin the video. Even though Tesla's most recent delivery report was kinder than anticipated, the company's notoriety is still unquestioned. Imagine that after a 40% spike in deliveries in 2022, Tesla is currently coasting toward a 37% increase this year. Is that really true? But there's still more. Thanks to Tesla's groundbreaking inventions, the future is looking brighter. Big debuts are planned for the much-awaited Tesla Semi and Cybertruck. Picture these groundbreaking products arriving on the market shortly. Furthermore, Tesla's capabilities extend beyond cars. Its energy-generating and storage segment is rapidly growing. It is anticipated that this segment's sales will soar due to ongoing expansion. Let's now explore Tesla's venture into the realm of artificial intelligence. The business is spearheading the effort to integrate AI with electric vehicles, not just tinkering with it. This innovative strategy is helping Tesla close the gap with its competitors and solidify its position as the undisputed leader in the sector. I find it intriguing to observe how the auto industry is being revolutionized. Even with such a high price tag, Tesla's stock is a sign of strong demand. Its growth trajectory is predicted to continue, surpassing that of rival automakers. And there will soon be more positive news. With the economy emerging from its brief recession and moving toward a future dependent on help, Tesla is expected to see a sharp increase in profits. This implies that Tesla's stock has a promising future. The landscape is dotted with established automakers like General Motors, Ford, and Toyota, as well as up-and-coming EV companies like Lucid, Rivian, and NIO. But in this mosaic of automobiles, Tesla stands out by itself, surpassing its competitors in stature. Tesla leads and reshapes the automotive narrative rather than merely participating in it. This business is a titan straddling the boundary between the old order and the emerging one. Tesla has challenged the current quo and raised the bar for automotive technology, energy economy, and manufacturing skill with its exclusive concentration on electric automobiles. Tesla stands out from the crowd of many competitors in this field because of its distinct combination of invention, market influence, and leadership. This allows it to be seen not just as a participant but also as a trailblazer who is shaping the very future of the automobile industry. The problem with legacy automakers is that they continue to produce vehicles using internal combustion engines, ICEs. With its days numbered, this technology is gradually disappearing from the annals of automobile history. All throughout the world, nations are embracing a new era. For example, starting in 2025, Norway will only accept zero-emission automobiles. In 2030, the sales of new internal combustion engine vehicles will be prohibited in Britain, Israel, and Singapore. The goal is for EVs and non-ICE vehicles to account for more than 20% of sales in China's massive automobile market by 2025 and to take the lead by 2035. The United States, which has historically been a fuel-hungry nation, plans to have 50% of its new automobiles be zero-emission by 2030. In a similar vein, the EU plans to stop selling new fossil fuel cars by 2035. Given this, Tesla's high valuation is more than just a figure. It's evidence of the company's enormous potential to dominate the worldwide market. However, what about conventional automakers' electric vehicle endeavors? As a matter of fact, they are much behind Tesla. The process of converting a traditional carmaker into a skilled electric vehicle producer is extremely difficult and expensive. Imagine those vast, multi-billion-dollar plants that were formerly the pride of ICE manufacture but are now in danger of being obsolete. The conversion of these for use in high-end EV production involves more than just flipping a button. Furthermore, while conventional manufacturers are dipping their toes into the EV space, their efforts are insignificant compared to Tesla's advancements. Think about this. GM's EV sales at the end of Q2 2023 were a small percentage of Tesla's. Rather than being a core, successful business, EV manufacture continues to be a peripheral, unprofitable endeavor for GM, Ford, Toyota, and other companies. Tesla keeps coming up with new ideas, putting it further ahead of its rivals, even as they struggle with the challenges of electric vehicle production. Direct EV competitors to Tesla, such as Lucid, Rivian, and NIO, also have difficulties. They're not yet to demonstrate expertise in producing large cars, much less take against Tesla. In instance, NIO is worryingly depleting its cash, diluting its equity, and only managing a pitiful 1% gross margin in the most recent quarter. With their awkward ramp-up procedures, EV startups confront an uncertain future due to large capital requirements and a difficult economic environment. Tesla is in a unique position because of its economies of scale, technological skill, and profitability. It can afford to temporarily cut prices in order to take market share away from these struggling rivals. In addition to being a fantastic investment, Tesla stock has demonstrated the company's continued supremacy and market leadership. It's obvious that Tesla will keep growing its presence in the automobile industry going forward, and as a devoted shareholder, I look forward to this adventure. With its latest release of Q3 production and delivery data, Tesla presents a picture of steady development with fascinating complexity. Tesla produced 430,488 cars and delivered 435,559 in this quarter, a modest decrease from 466,140 cars delivered in the prior quarter. That being said, there is no reason to worry. Tesla continues to aim high, with plans to deliver about 1.8 million cars this year. The scheduled downtime in Tesla's factories was the main cause of the minor sequential decline in production and deliveries. With more than 1.37 million vehicles delivered in the first 3 quarters of 2023, Tesla is expected to deliver over 430,000 vehicles in Q4 of this year alone, putting them well on track to reach the 1.8 million barrier. This objective represents a significant 37% rise over the numbers from the prior year. The numbers in Tesla's most recent report on Q3 production and delivery say loudly about the company's potential and market position. A total of 4,974 Model 3/Es and 15,185 Model S/X were released by the company. Estimated sales for the Model S/X segment are 1,476 units after deducting an 8% leasing rate. Similarly, 42,311 vehicles were sold in the Model 3/Y sector, with a 4% lease rate. Based on an average selling price, ASP, of around $44,000 for Model 3s and $10,000 for Model S/X, it is possible to estimate the revenue from car sales for Tesla in Q3 at $16.2 billion for the Model S/X sector and a significant $17.7 billion for the Model 3/Y category. When they are taken into account, Tesla is expected to sell cars for a total of about $19.3 billion in Q3. Although these revenue projections are in line with consensus estimates, Q3 profitability may surpass projections. There are currently 3.171 billion shares of Tesla outstanding, and third quarter EPS of roughly $0.76 is predicted by consensus. This suggests a net income margin of almost 9.9%, or roughly $2.41 billion in net income. In the most recent quarter, Tesla produced earnings per share, EPS, of $0.91, exceeding the consensus forecast by 10 cents, or around a 12.35% beat rate. The previous quarter's net income margin was approximately 10.8%. In the event that Tesla maintains its 10.8% income margin from the previous quarter, its net income would come to about $2.64 billion, or roughly $0.83 per share, a 9% beat rate. As a result, Tesla may outperform the revised consensus forecast for EPS. Tesla reported an EPS of $4.07 in 2022, taking into account the company's potential for longer-term profitability. Consensus forecasts for this year, however, indicate a 17% year-over-year fall to $3.40. Price reductions, the macroeconomic slowdown, inflation cost increases, and other transitory phenomena are blamed for this decline. As a result, it is projected that Tesla's profitability will increase as economic conditions improve. Consensus EPS projections for the upcoming year are centered around $4.75. But Tesla might very well outperform this, particularly during prosperous economic times. Due to a number of sporadic circumstances, Tesla's net income margin in H1 2022 was approximately 15.5%. However, in H1 2023, it decreased to 10.8%. Tesla's net income on estimated revenues of $130 billion could be over $20.5 billion if it returns to a profitability level comparable to H1 2022 next year. This would translate to an EPS of about $6.35, which is significantly higher than the consensus estimate of $4.75. Notable is the fact that the upper-end EPS predictions can reach up to $7.58. As a result, the $6.35 estimate is reasonable and conservative even though it is higher than the consensus. A net income margin of roughly 11.5% is suggested by the average estimate of $4.75, which represents a net income of almost $15 billion and represents only a modest improvement over this year's lows. It is anticipated that Tesla's profitability would rebound more forcefully than the predicted 11.5%, which might result in an EPS that is much higher than the consensus projection. But even with these sanguine forecasts and scenarios, a number of hazards still exist. Tesla has fierce competition from both well-known and up-and-coming manufacturers. It's possible that its profitability and recovery could fall short of forecasts and miss historical highs. Furthermore, revenue and earnings growth might not be as strong as expected, which could cause a contraction in value and a drop in the stock price. The persistently difficult macroeconomic climate can still have a detrimental effect for Tesla. Furthermore, there is no assurance that Tesla's upcoming initiatives, such as the Model 3 and Y cars, will be successful. These are important things to think about for investors who are thinking about buying Tesla stock, among other things. Notwithstanding obstacles like a sluggish macroeconomic climate and rising inflation-related expenses, Tesla continues to project a strong future profitability. The business's potential in a number of cutting-edge markets, such as the energy sector, Tesla Semi, and Cybertruck, emphasizes its broad growth trajectory. What are your opinions now regarding Tesla's capacity to continue being profitable and leading the market in the face of growing competition and unstable economic conditions? And how do you anticipate Tesla's upcoming initiatives, like as the Cybertruck and Tesla Semi, will affect the company's overall growth and revenue? Share your thoughts in the space provided for comments below. Additionally, please remember to like and subscribe to Tesla Stock News if you thought this research to be informative. We appreciate your time today and hope to see you in our upcoming videos.